Myer and David Jones at risk of entering administration. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I've got my stein of coffee that's frankly keeping me warm at the moment because it feels like 10 degrees right now. Good old Queensland, the Sunshine State, everyone. And I thought we'd have a look at this article from the ABC discussing the risk of Myer and David Jones entering administration. Because there's one very interesting thing. I don't think any of us who've been following the news, who probably can't remember the last time we went into Myer or David Jones, would be surprised that they're in a little bit of strife. I think the last time I went to, what was it, Myer or DJ's, I'd won a voucher. At a function. $20, you know, go there, buy your wife some nice makeup, I thought. I learned that was not possible. Whatever I went to buy, I'd have to add to. So you can see I'm probably not the target demo, everyone. But we've been reading about just repeatedly one business after another going into administration or going under, trying to be sold, in the retail recession that's been going on here in Australia. But what makes this different, not just because Myer and David Jones are huge stores and they're anchor tenants in many centres. You know, they'd be, if not a primary anchor, a secondary anchor, bringing people to those centres, even the smaller ones. But here, the insurance impact of it. Because insurance really has a lot of control over business, more than you might realize. What we were taught at university was particularly about PI, public indemnity insurance, is that once if something happens on a project and you say, oh, sorry, or you admit, oh, that was a mistake, you essentially void your insurance. You remove your insurance, your PI's ability to challenge that instance or that claim or to fight for you or to shift it off onto another. And we had one job where I had hired all the engineers to work under me. There's a little fit-out job. Well, not a little fit-out job. There's for about 100 staff for a government organisation, decanting from a central building to out in the suburbs to do a big refurb. And what had happened was this electrical engineer, they had just done a good old copy-paste of their lighting design. Good old copy-paste. They hadn't done the correct lighting analysis, the calculations. And this is advice to all the architects out there and anyone working in commercial. Make sure you get your engineers to do a light map and that they include the finishes and colors that are actually going to be in the place. Because this was quite a heavily unionized site. And the problem was the lighting was too bright and people were complaining and getting headaches and whinging. Let's just say the gender and age demographic that was the primary occupants of these offices were more prevalent to complaining and whinging and wanting their hands held. What happened was we had a meeting and the engineer, the first thing they said to the client was, oh, sorry, it was our mistake, which is reasonable and sensible. But the problem was they were working under me. That means they voided their insurance, they voided my insurance, and we could all be sued. Sometimes you have to be, in this circumstance, a little bit more diplomatic. It all worked out in the end. They just had to remove a few lights, and the solution was easy. It was found. A valuable lesson for me that even more experienced, older people in the industry can still make these little mistakes, and you pay the price for them. I'm now very reluctant of hiring people under me, or consultants under me. I always want the client to do it because it's a whole element of risk for me managing their finances and then taking on their insurance liability for little benefit. It can still work much better the other way around. But anyway, that was a lesson for me just in insurance in my younger years and the impact it can have on business. Now, it's going to have the insurance industry, I've been told, because I just did my PI, my yearly insurance, handing over the cash to my broker. Apparently PI isn't making that much money and there's a lot of issues with insurance. We saw it, the profitability in the industry there. We saw it with regards to adventure tourism, how they're essentially now at a point where they can't get any insurance. It happened years ago to the architecture industry, where they had to start up their own insurance company. And what happened in other industries as well. What can happen is the government can become the insurer of last resort because no one wants to provide it. So, there were once the giants of Australian retail, the only places to shop everything you wanted, all under one roof. Both for Myer and David Jones, the rise of specialty stores coupled with the invasion of the internet has triggered a dramatic fall from grace. I mean, they're an odd shop. I mean, you go in there, the service is strange. You get all these little tiny shops where, I don't know, do people have more brand loyalty now? Or they just go online? Now, both are struggling to stay alive, and the pandemic has made their perilous situation worse. Sales at Myer are lower today than they were 10 years ago. DJ sales are up in that decade, but only by 8%. Myer current share price sits around 24 cents and is 94% lower than the $4.10 it listed at in 2009. Wow. David Jones was bought by current owners, Woolworths South Africa, and they're not related to Australian Woolworths, for $2.2 billion in 2014. 6 years later, more than half that money has been written off as the South African company's foray into the Australian department store market backfired. Despite their success in their home country, turning around the fortunes of David Jones has proven unachievable. We think David Jones and Myer are in a slow retraction, said retail analyst Brian Walker from consultancy firm The Retail Doctor. I'm hesitant to say death, but they're not a long way off. So, I mean, they could be at the end. Would people miss them? I'm sure there would be some that would. I mean, let me know in the comments. The thing is, when I ask these questions, let me know in the comments. I know the demo of the channel. We're doing well. We're about 12% female, but we're 88% male. And most of them, most of you guys are all 40 plus or mid 30 plus. So how many of you are going to be going to David Jones or to Myer? I can't imagine it'd be something that you regularly attend. Let me know. Maybe I'm wrong. Maybe I'm the oddball that just doesn't love going into the city, paying for parking and going to, to Myer or David Jones. Now, if this was an article about Bunnings going under, I'm sure many of you would, be up in arms. Maybe I'm just playing to a stereotype that doesn't exist anymore. I met a lot of builders that put so much product in their hair, it just seemed unnatural to me. And not just because I'm bald. Back to the article, enough of my rambling. So, both are only alive at the mercy of their landlords and bankers, and both need to change their operating model quickly if they are to survive. 7 years ago, Myer attempted to take over David Jones. The deal fell through, and the struggles of both stores have intensified. I don't think the Australian market is now large enough to support two major full-line department stores, said Associate Professor Gary Mortimer from QT in Brisbane. I think fundamentally we may only see one survive, and that survivor will only inhabit CBD locations. That makes a lot of sense. You can see a department store being in a prestigious CBD location, and the experience is different. I've been to some suburban David Jones or Myers, usually walking through them because the car parks are empty to get to the centre, and they always feel quite depressed. We did a Lorna Jane fit out, a concept for one of these I think it was David Jones, and it was interesting just all the restrictions they put on the fit out, and they wanted something a bit different. So it's quite challenging to get their own defined space in there. So, but will they survive? Australia's largest provider of trade credit insurance has severe doubts about the ability of the department store chains to pay their way. There we go. It has announced it will stop providing insurance for suppliers who want to cover the risk of not getting paid by Myer or David Jones. Now, let's just think about that. So, if you're providing goods to Myer or David Jones, if you're a supplier and you want to cover that risk, you now can no longer have insurance to mitigate that. What does that tell you? Where's the confidence of the insurance industry there? I mean, their game is about risk management and risk mitigation. They know what they're doing. They're the experts, and they're not willing to provide this product anymore. Is that a buy or a sell order? right there. You know, what's that signal to the market? QBE told the ABC the risk of traditional department stores are now too high. University of Tasmania retail expert Dr. Lewis Grimmer said the message from QBE is clear. I think that sends a pretty ominous signal to the market that QBE are not at all confident that Myer and David Jones are going to be able to pay their suppliers, the doctor said. I mean, there you go. I'd be concerned if I was supplying to those organizations. I'd be concerned if I was even doing trade work to them. This is when you start asking for payment up front. So it's another nail in the department store coffin, but not surprisingly, the stores see it differently. Myers said it has and will continue to pay our suppliers according to agreed terms. Yeah, but we'll see what those terms are like. I know some terms are just ludicrous. They get months of free interest, some of these places. We all know the reputation of Coles in dealing with their suppliers. Here's the thing, this just shows you how much of an impact the insurance industry can have on these businesses. And that's another worry. Well, we have all these calls for more government intervention into other aspects. You're going to get insurance companies saying, well, I can't provide you with public liability until you implement this policy, or until you restrict access to your business to this undesirable political group of people. That's the risk, everyone. That's how it happens. David Jones told the ABC, we disagree with QBE's assessment and will continue to work closely with any affected suppliers. Mr. Walker said it was brand damage for David Jones and Myer. Yes, this is atrocious brand damage. This is going to take a real hit. Maybe not to the average punter, but to anyone in business who hears this. To anyone in business who sees or reads this, it's going to make them think twice. You'd hope it will make them think twice about providing goods and services. It shows that the risk profile is much higher now in the minds of the insurers and therefore the market, he said. So the pandemic has exacerbated existing woes. As department stores worldwide have gone out of fashion, both Myer and David Jones have been unable to defy the trend. Both went into the pandemic in poor shape, and the pandemic has exacerbated their problems, one of which is getting customers into their stores. Well, I mean, there's going to be more and more people that have experienced online shopping for the first time and are just going to accept it. So, managing change rooms is extremely difficult in a world where people are concerned about things they touch, Dr. Grimmer said. Fashion, of course, is a staple of David Jones and Myer. Another is cosmetics, which Dr. Grimmer said will also suffer at the hands of the pandemic. If you think about the cosmetics floor in department stores, part of the shopping experience is trying products on and touching and feeling products, she said. There's a lot of consumer concern about these sort of activities. There's evidence. That is evidenced by DJ's latest sales figures, which show a fall of 36% in April. In fairness, other retailers would have taken a similar hit with the pandemic lockdown in full swing, while Myer had many of its stores closed, so its sales will have fallen even further. So fewer people are shopping in CBDs. In the long term, DJs and Myer have been pinning their hopes on extricating themselves from the revenue-draining leases in loss-making suburban stores and focusing their efforts on their profitable CBD flagship, such as Myers in Burke Street store in Melbourne and DJ's Elizabeth Street outlet in Sydney. Even that could take a hit from the pandemic. As a result of the pandemic, many more of us are going to be working from home. So there's going to be fewer people traveling into the city to work, Dr. Grimmer said. It seems to be happening. I'm talking to more and more people that don't want to go back. There'll also be fewer people traveling. Yep. When it comes to online, the department store are seeing sizable increase in web traffic, but it still represents only about 10% of the total sales. I think they were late to the game with the departments. They wanted to remove the risk of cannibalizing from their expensive footprints, so they are going to be late to the game. Many specialty stores are doing much better. Myer and David Jones are not alone in the department store death spiral, as overseas experience has shown. For example, US giant JCPenney filed for bankruptcy protection last month and announced it will be closing 136 of its 840 stores. Here, speculation persists that Myer may end up in voluntary administration, something it strongly rejects. Others, such as QUT Associate Professor Gary Mortimer, aren't so sure. Potentially one or both at some point go into voluntary administration, he said. That's not necessarily a bad thing, as it may give them an opportunity to renegotiate leases and I guess put forward a more viable business. We can see. I mean, is it the leases that are the biggest hit? Probably is. Probably is. And these big, even though the plush deals they get in the suburbs. But, I mean, here you go, guys. The insurance industry is just done tremendous brand damage to these two huge department stores here in Australia. They're going to have an impact. They're going to have an impact on suppliers' decisions. You know, do you know anyone who's supplying to these stores? Would you feel confident doing it? We had one instance where a business went under, and they, Phoenix came back as another one. Then they approached us to do some work with them, and I said, sure, but you need to pay me up front. How do you think that went over? As always, everyone, please let me know your thoughts and opinions in the comments below. Are you a fan of Myer or David Jones? Are you a regular attender? Do you have the Myer, credit card? Let us know. Thanks for watching. Please like, share, and subscribe to the channel. If you'd like to support the content I create here, there are a few ways you can. Simply commenting and interacting with the channel is great. It helps the YouTube algorithm know that people are enjoying the content and shares it wider. You can financially support us via joining the channel on YouTube or Patreon, or using our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. Avoid Myer and David Jones by using our Amazon affiliate links. You can use Gold Pass from the Perth Mint, buy our merch from HeiseSays, or support us via PayPal. Thanks, everyone. I'll see you in the next video.